In the past, financial advisors were mostly for the wealthy, with fancy suits, high investment minimums, and hefty fees making them out of reach for most people. Today, technology and industry changes have opened financial advice to almost anyone with internet access. With so many advisors and service options available, picking the right one can be just as tricky as before, if not more so. In this episode of Financial Fortitude, we break down the current world of financial advice, helping you figure out who to hire and what type of advice is best for you. Be sure to stick around until the end for some extra tips and insights that you won't want to miss. Welcome to Financial Fortitude, a podcast for high earners, families, and business owners. We are your hosts, Michael Acosta
and Brady Hemmerly. Each week, we bring purpose-driven financial guidance to you so you can be assured you're on the right path. If you're looking to become an extraordinary wealth builder, let's dive in.
Brady, I'm excited about getting into this episode today. I think this is something that we both struggle with on a daily basis when interviewing new clients to onboard and work with for the long term. Honestly, it's trying to figure out whether or not they're working with the right advisor from the get-go, if they're coming from a previous relationship, or trying to figure out if we're the right fit for them based on the services that we offer and what they're looking for. What are your thoughts?
I think big picture, this is the biggest challenge that people face on a day-to-day basis, whether it's selecting a new advisor or working with their existing advisor. But it's a challenge that many clients face, and they're not even really aware that they're facing it. Like, hey, I'm experiencing this financial challenge, this financial hurdle, this life event. It's time to take some form of action. And they look back at either the advisory relationship that they already have, or perhaps they look forward to a new advisory relationship that they don't have. And the biggest challenge is not like, hey, what decision or investment do I need to choose? It's who do I need to work with to make sure I'm getting the right advice and it's in my best interest and I'm actually on track for what I'm looking to accomplish. And it's hard because most people don't have the industry expertise, or they have no idea what the landscape looks like.
So then in that case, they're kind of going about it blind, if you will, or they're using the advice of others. But before we get into the actual breakdown of where most Americans are getting their financial guidance from, because I found it very interesting when we were doing a little bit of research in advance of this episode, give a little bit of a background about why you're taking lead on this conversation, because you've seen behind the curtain having some experience working for a large institution here out of the Charlotte, North Carolina area.
Yes. Before beginning my career, or at least changing careers, paths at least, and working alongside of Michael, I worked for about 5.5 years, a much larger institution, one of the biggest investment fund managers in the entire world, very similar to probably the companies that individuals recognize online, recognize in commercials, or 401k providers for larger companies. And for much of the early career time I had, right, the big corporate world was the only veil of which I worked behind, and I thought was kind of the silver bullet. Like, hey, we're doing the best work for people, here's why. And then it was only after leaving that I realized that, hey, you know what, there's different ways to think about things, there's different options out there, and that big corporate giant that I thought was serving everyone fantastically was really leaving some people behind. And
probably a big swath of folks too, right? Because there are going to be things that we'll talk about in today's episode that create those barrier to entry for certain investors or certain families or certain business owners who were wanting to jumpstart their financial planning journey. And a lot of the times, if you don't have the right aesthetics on paper, you may not even get a seat at the table to be able to interview the advisor or be interviewed by the advisor. So I love the topic today because I think it is an issue in the industry, creating too many barriers to entry to gain access to advice. But even more so, I was blown away by where individuals are getting their financial advice. And a lot of it is driven by technology and the advancements of technology. But let's go ahead and dive into that. So what did you see? Where did you find this information? And what are your thoughts?
We went online to a Bankrate survey. And the survey essentially took a swath of Americans in 2023, and they asked simple questions like, how old are you? What is your demographic background in some form or fashion? And just quite simply, where do you get advice from? And we found that the majority of Americans, somewhere in the neighborhood between 55-60%, are seeking financial advice on a regular basis or sought financial advice in 2023.
So let's pause there for a second before you go on. So out of the entire American population, at least those who answered this survey, right? But in general terms, between 55 and 60% of Americans are seeking financial advice.
Yes.
Right? So that at least tells us that there are folks out there who want to try to better their situation, that, hey, they feel like they're at a point to where having someone that they trust who's a professional that does this on a daily basis can come in and help get them to the next level, can help them level up so that they can take advantage of extraordinary wealth building opportunities.
Yes. Now, you use the word as looking for professional guidance or as looking for a professional. I think that's where the stats are more staggering. I don't think it shocks either of us that, hey, there are a lot of people out there looking to or consuming financial advice. I think what was shocking was essentially where that advice was coming from, or at least where people look first. So the survey itself, participants in the survey were allowed to answer multiple times or basically check off the box, hey, I'm getting advice from here, here, and here. And what we found is the most or the largest category of where people were finding advice was first and foremost friends and family. So I don't know how many of my family members are financial advisors. I think it's just me out of my entire family, but it's just me. So
likewise.
Close to 50%, 47% were seeking advice from friends or family. 43%, close to 50%, seeking advice from social media influencers somewhere online where they could communicate, whether it be Facebook, Instagram, TikTok otherwise.
YouTube.
Yep. And then between financial websites, banks, and other institutions, that landed somewhere about 28, 22% respectively, so in that same neighborhood. And then only about 35% of participants were seeking or found financial advice from advisors from someone as a licensed professional, which I think is shocking to us, as a lot of our clients come to us and are looking for advice. They kind of come right out with, hey, this is who we are, what we're looking for, what our experience has been, this is why we're here. But there are another 2/3 of people out there that we never even speak to who are getting advice from somewhere else, and it's not the professional.
Or have the opportunity to speak with them because they think that the advice that they're receiving, which it could be, is best suited for them because of the influencer they're following on social media, or because they've seen that their relatives or friends have had success, and they think that the financial game that they're playing is the same as theirs, which could very well be, could very well not be, right? And time will tell as to whether the decisions that they're making today are going to give them the opportunities that they hope the outcome would provide. Only time will tell. Now, some of the other categories that we came across where individuals were getting their financial guidance from were, of course, radios, TVs, or podcasts, which was about 18%, books at about 16%, newspapers and magazines about 14%, and then somewhere else is just a general category at 3%. Now, what I'm curious in unraveling with you is, why do you think that only 1/3 of the population is seeking financial guidance from a financial advisor or trusted professional?
That's a great question. And I think what drives those numbers, or what drives that experience, is first and foremost the bias behind working with a financial advisor. You had mentioned it or noted it early on, at least in the introduction. For many people, especially younger people in general, I think they tend to reserve still working with a financial advisor with, hey, I need to have some wealth before I go speak to somebody, or I need to make a certain amount of money before it's time for me to actually start working with somebody. So I think a lot of it is industry bias, or at least industry history, perhaps, as to what things look like or have looked like in the past. I think a lot of it is the influx of social media or influencers who are offering what is free guidance, free advice, or kind of just coming to the table with their thoughts. And as people consume that information, many talking heads, it's like, hey, I don't need a professional. I've got 1 or 2 of them that I basically subscribe to and listen to on a day-to-day basis.
Right. No, I know. And that in itself can be problematic. And again, depending on how complex your situation is, or what level of advice you're seeking, or where you're at on the spectrum of feeling savvy from a financial planning or personal finance standpoint, will dictate where you try to draw your advice or guidance from.
Yep.
Over the course of the last 5 to 7 years, especially within the investment realm, there has been a race to zero from internal expense ratios on fees for mutual funds and ETFs, right? Which has put pressure on financial services in general to reduce fees altogether. But I think we as consumers can also agree that just because something costs less doesn't necessarily mean that it's more efficient, it's more optimized, or it's a better solution.
Yep.
Right? With that, I think we also have to take into account just the different generational demographics that were responding to this survey. That's going to illustrate a distinct picture for those of you that are listening today. And it's no surprise to me because Gen Z and millennials, and that's going to be anyone ranging from 18 to 42, are individuals who are very proactive in wanting to consume content, knowledge, and information. Yep. We have no problem rolling up our sleeves, pulling up a YouTube video, and trying to figure out how to do something on our own before we seek out the guidance of a professional. Right?
And why do you think that is? Is it cost savings? Is it mindset? Is it upbringing? Like, what drives some of that?
I think some of that might be upbringing, but I would venture to say that most of that is probably cost savings. Yep. That we feel that just because there's access to a plethora of information and examples online, that what's the point in paying somebody else to do it for us versus us doing it ourselves and saving a little bit of coin. Now, I am all for DIY projects, especially around the house.
That's what I was going to say. I think we're both a little bit guilty of that.
Yeah, I am not an exception to the rule. But over the course of the last 5 years or so, I've gotten to the point to where, one, time is a finite resource. I only have so much time in the day. I have 3 young children, 4th on the way. I'm self-employed. I'm a business owner. I'm trying to be present. I can only do so much. Yep. It's probably going to take me a multiple of time to complete a single task that somebody else who is more proficient and maybe specialized in could complete for me. For example, if I needed to paint an entire house or an entire condo, I could do that. It's probably going to take me a lot longer than if I just hired somebody who paints day in and day out to come in and knock that out in 1 to 2 days.
Yep.
Right? It might take me a week. It might take me 2 weeks just because of the amount of time that I have accessible with everything else I have going on. So again, I think cost is a big proponent of it. But, Gen Z, about 76% of Gen Z, again, age 18 to 26, are seeking financial advice. And these are from the research that was conducted by Bankrate in 2023. Millennials, age 27 to 42, 65%. Gen X, age 43 to 58, 51%. And baby boomers, age 59 to 77, 46%. So what you're seeing is that with the older generations, they're less proactively reaching out or seeking financial advice. Some of that could be, if I'm going to speculate, that they already have an existing relationship with an advisor, or they just come from a generation where doing it themselves or not asking questions is what they feel like is the best choice of action for them.
I think that's it. A lot of times, both from experience and generally just the attitudes of those different demographics is right. I think young people are always asking questions.
Well, that's almost a problem, right?
Yeah, right. Where do I go from here? What's my next move? How often do I need to be really looking at this? Where a lot of times the older generation, especially boomers, I'm kind of winding down my career or already done. I've already got my plan in place, or at least I think I have the best plan in place. And there's not much else I need to do here, right? How many times do I need to reinvent the wheel, especially as things are generally simplifying as I get older? What's staggering, regardless, is what I'm hearing, reading, seeing. 3/4 of people 26 and under are looking for advice. 2/3 of people in their 40s and under, 42 and under, are looking for advice. And then even for those that are about to retire, 58 and under, half of them are still looking for advice or actively seeking advice, which means there is a gap in the industry, whatever it might be, where people are looking for service, looking for guidance, and just aren't getting it.
So we've already identified that there's potentially 35% of Americans who are already working with a financial advisor. It doesn't necessarily mean that they're proactively defining and designing a financial plan. And that's just because the wide array of financial services that can be offered will look different from place to place depending on who you decide to work with. So we know that there are individuals, families, and business owners who are proactively seeking a relationship with a financial professional. The question then becomes, who do you work with based on the overall current landscape, and what does that look like?
Yep. And that's a challenging question, right? If I were to ask my parents, if I were to ask my siblings, if I were to ask even my friends, how do you know, or who do you go to begin working with a financial advisor? They might say, well, I don't know. I'd probably ask you first and then tell you which direction to go. But for ease, Michael and I have broken it into essentially two different factor-based qualities, and we'll have some insight to develop here as we continue. But the first of which is how compensation is structured. The second of which is the size and the service expectation from a particular firm. And then we'll go into some more things. But I think the big first way to characterize the landscape is this difference between fee-only advisors, fee-based advisors, and then commission-based or commission-only advisors. So, Michael, tell us a little bit more about what your experiences looked like from a fees perspective and which direction you feel the industry has kind of moved to more recently as to how the landscape looks now.
I think over the course of the last 15 to 20 years, the landscape of the overall financial services industry has definitely shifted away from commission only.
Yes.
In a lot of different professional services, not just financial services. We as consumers feel that it's much harder to trust a professional if they're directly incentivized to sell specific product.
Yep.
Right?
No one likes the sleazy sales guy.
Yeah, no one likes the sleazy sales guy, including myself. I have a reluctance for sales, and I'm in a job that, I'm self-employed, so I have to do sales. But it's shifted away from that. And so we teeter-totter between most commonly within the industry, fee-only versus fee-based. Fee-only is going to be very similar to consultative work, where you're paying a flat fee, whether it be from a percentage of your investments under management or just a hard dollar fee from cash flow for advice, right?
Yep.
Could be a retainer, could be a one-time fee. It really just depends. But what you're getting is a consultative touch for advice and guidance that has no direct ties to a specific product. That is a great solution that could lead, right, not guaranteed, could lead to a wonderful relationship. Now, there's also fee-based. Now, why is it called fee-based? Well, it's fee-based because that same relationship will offer investment management. A percentage of your assets under management are going to be charged a percentage fee, and that's where the professionals deriving their income from. They could also charge you a flat fee for their advice or a subscription-based fee, right? You're going to pay me X amount each month or each year for my advice to be consultative with you. Now, at the same token, these professionals might also be licensed and educated in the sense to where if you need help getting access to certain commissionable solutions like life insurance, disability insurance, long-term care insurance, or annuities, they have the wherewithal to go ahead and shop that out and find you the most attractive solution based on your overall needs.
Yep.
And in that instance, they're going to receive some form of payment from whatever insurance carrier they're using, which another word for that is a quote-unquote commission.
Yep. It's understanding, hey, what am I looking for? Is it more consultative in nature or is it more solution-driven in nature? And then who am I working with? Am I working with the agent first, perhaps with some other advice that comes along the way? Am I working with the investment manager first with some other solutions or advice that come along the way? Or am I just working with someone who's taking a bird's eye view and not really taking action on any solution because they're just there for advice? Or perhaps am I working with some combination of those different players, whether it's with two different individuals or an individual, like you said, who kind of does a mix of all of it, who have the licensing, who have the experience in a variety of different areas?
Yeah, the analogy I like to pose or present to prospective clients is that, hey, you can work with the architect who's going to design the blueprint for your custom home, your forever home, and that's more consultative in nature. You're going to pay that architect a hard fee to get the final mock-up of your blueprint. Once that blueprint's delivered, you basically shake hands and you can go on your way. Or if the architect also is licensed to be the general contractor, then they can turn around and actually do the build out of your actual custom home that they just help you design, right? Yep. That's going to be more in line, in my opinion, with a fee-based advisor a lot of the times.
Yep.
From a holistic standpoint, because fee-only advisors will not touch and are not able to touch insurance-based products because they don't market themselves with accepting commissions, if you will. Yep. Now, at the end of the day, you could be a fee-only advisor and you may do things that are not morally ethical. You could be a fee-based advisor and be in that same situation. Just because you're working with one or the other does not exempt you from the integrity of the individual. So make sure that the services that they're offering align with what you're looking for, that you're not paying for a service that you're never going to utilize, kind of like buying an expensive phone and you're not even using half of the actual features that are offered, right?
I think that's most of us with iPhones.
Exactly.
At least those over 30, right?
But also understanding that, hey, does this individual have my best interest in mind? Are they a fiduciary? Are they putting my needs ahead of their own, regardless if they're fee only or fee based?
Yep. And I think that to go back to your architect example, and I think this is where each of our differing experiences, we really have different thoughts around what this looks like and how they function. But that next factor when it comes to selecting an advisor, selecting that architect or general contractor, is it coming from a larger corporate, more entity-based firm, or is it coming from a smaller, more boutique or personalized firm? And so where do you see the clients that you've worked with? Do you see a lot of them coming from corporate firms into what is your more personalized firm? Do you see individuals who have no experience with corporate and just manage to kind of step into your world? How has that looked?
Yeah, more often than not, I've kind of seen a wide range, but I'm seeing a lot of professionals, a lot of individuals, a lot of business owners who have no pre-existing relationship with advisors and have been consuming most of the information on their own via the internet or social media. And they've gotten to a point where they recognize that, hey, I no longer have the time to be able to do all this research or to be able to confirm or deny if what this influencer is presenting me or what this blog post argues or what this YouTube video presents is actually in my best interest.
Google isn't giving them the answers anymore.
Right. And Google's only as smart as the actual Googler, right? Yep. That's an actual word. For them, if they have a 401k at their employer, the first interaction with a quote unquote financial advisor is the advisor who's managing the 401k, which a lot of the times they're not able to give or extend personalized advice from a holistic planning perspective because they don't have the full data collection or access to the individual's personal information to be able to provide guidance, right? That would be a liability on them. So very minimal interaction. I've also had other clients who early on in their careers making six figures, having, a decent amount of liquidity on hand, close to six figures in liquidity on hand for investments. But because they didn't have $500,000 in investable assets around 26, the institutional advisor couldn't work with them because they had too high of a minimum.
That was me. Yep.
Right. And so this is one of my best clients today, right? Making good money right out of the gate. Had decent amount of liquidity on hand for us to jumpstart things with and get the ball rolling so that they could get to that extraordinary wealth building status and just see their wealth compound. Fast forward 5 to 6 years now, and they're one of my best clients. Yep. And I almost need to send a thank you card to the institutional advisor for turning them down because, it's been a great relationship, right? And so that's where I think these barriers to entry can become problematic because most individuals who are seeking financial advice, they just need the coaching and the behavioral guidance. And that's where the real value comes in working with a financial professional, in my personal opinion. It's more of the behavioral, the emotional control, and the consultative disciplines that are being provided and the accountability. Everything else, in my opinion, will follow if the individual can control at a baseline what they're bringing in and what they're spending. So not to get off track with this, but again, you have the big institutions. In between there, you might have some private banks for certain clients. And then you have the boutique type offerings where it might be like shopping local, right? Someone like you and I, where we have our personal practice.
Yep.
And the next opportunity is where technology has really started to create a footprint, which is around the robo-advice. And in my opinion, it's not really advice, and I'd love to get your thoughts on this, because it's usually focused solely on portfolio construction, portfolio implementation, and just investment management from a robo-advice standpoint.
Yep. And so I tend to share that opinion, whether it's about the big institution or the robo-advisor or the robo-advisor that's built and run by the big institution. Essentially, the big institution, notably on the investment side of things, their effort is to gather as many investments or assets or clients as possible. What they advertise is holistic, right? As you mentioned, many of the advisors don't have the experience or even just don't look at the whole situation. But from a planning perspective, the focus of most of those individuals or most of those companies is how do I bring more clients in? How do I put them into a predetermined or pre-selected menu of investments that generally fit what is their basic need? I oftentimes equate it to like being on the cruise, right? If you go on a cruise of some kind or you go on vacation and you're at a resort, some instances you may be able to completely customize what your meal looks like. In many instances, you're just choosing from the buffet of options. Right? And those buffet of options, they feed you, they keep you moving into the next meal, and they may be fantastic. But for some clients, for some individuals, that buffet or that pre-selected menu on the cruise isn't solving their needs. And I think that's especially true in the robo-planning space, right? It's not about planning. It's not about anything, but hey, let's make sure you're just in the right quote-unquote investments for you.
I think about the buffet analogy, and all I can think about is having an upset stomach and the meat sweats afterwards from not, controlling myself from a gluttony perspective with just eating.
And that can happen too in the financial
food, right?
world.
Yeah, no, it absolutely can. Overextending yourself in areas that you don't necessarily need to be in, right? Just because of what's being offered based on the advice that you're receiving, where it's coming from. For these individuals, these families, these business owners, it then becomes a question of what type of relationship makes most sense for me, right? And should I be seeking a one-stop shop, or should I be parceling it all together just based on the relationships and the team of advisors that I work with from a holistic planning perspective, right? So do I aspire to have an advisor that's primarily investment focused, but isn't really going to give much guidance or coaching or insights from a financial immune system perspective or a risk management perspective?
Yep.
Do I need to have a relationship with an advisor that has access to institutional banking type solutions like business bank accounts, business lines of credit, trust services, trust and estate services, if I'm doing a lot of trust planning as an ultra high net worth individual? Or am I at a point to where all I need is really a robo to help me with just accumulating some investable assets to where I can level up? And there's even holes and shortfalls in that solution as well, which is probably a conversation for a different day, so we won't go too deep into that. But based on your experience of where you came from early on in your career, what was the common denominator across the clients that you were servicing?
The common denominator across the clients that I were servicing was I was prescribing them. If we use a medical analogy, we try our best here, not in the medical professional. But if I was a medical professional, I was prescribing all of my clients who had either an investment challenge or a retirement challenge the same antibiotics. Right? It was the same funds with the same strategy and the same overall approach and management. And I was hoping that by prescribing them all of the same antibiotics, right, the similar or same portfolios, that everyone was going to experience a very similar outcome. Fantastic growth, wonderful income, the protection, or at least the feeling that they needed from a protection standpoint. What ended up being the challenge was, well, one, every client was different. The solution, although fit some clients fantastically, did not fit others well at all. And the service that they were getting from me and the big institution was limited because, as you mentioned, time is a finite resource. And for larger asset gathering firms who are just looking to bring people through their door and sit them down at the cruise dinner event, they weren't getting the service that I think they could have used or really did need at the time in their lives where, hey, things did get more challenging, or they did have more specific questions, or another solution would have been better, but the big firm didn't offer that solution.
And that's kind of where, from an institutionalized perspective, some clients can fall through the cracks. They can be misaligned with the solutions and services that are being offered, to where maybe having that robo or maybe having that one-on-one relationship with more of a boutique offering could be more advantageous. Because when it's a call center type environment, there will be some failures for clients. People will fall through the cracks, and there will be potentially high turnover in the actual relationships that this client is receiving with who's going to be sitting in the seat when they call in. It's not going to be potentially the same person. Now, obviously, this is generalized. You might get to a point from a wealth perspective to where you have a dedicated relationship manager from an institutionalized perspective, or even in the boutique office, right? Depending on the amount of assets that the office is actually managing. So I'm going to continue to emphasize that when it comes to trying to figure out who to work with you need to make sure that one, they're offering the services that you need. Two, that the way that they work with their clients aligns with what you feel comfortable with. Right? Is there a hard minimum on investable assets? Is there a hard minimum on how much you need to pay them each year from a planning fee perspective? Or are they going to be pressuring you into buying certain products throughout the diagnosis process as a way for them to be compensated through incentive compensation?
Yep.
Right? And everyone's appetite's a little bit different, and that's perfectly okay. But it needs to be a matter of understanding that, hey, financial services is more of an art than a science. You have different perspectives in how advice can be offered, right? Is it goal-oriented? Are we being purposeful around the decisions that we're making and making sure that all of the hard-earned dollars that we're earning is being dedicated to one of the concerns or objectives that we're trying to accomplish over the course of the next 3 to 5, 5 to 7, 7 to 10 years?
Yep.
Or is it primarily just, hey, let's put $6,000 or $7,000 a year into a Roth IRA and let's call it a day and let's set it and forget it? Because in my world isn't very static on a day-to-day basis, personally, professionally, and financially.
Yep.
So I wouldn't feel comfortable personally with setting and forgetting it.
No, and I think that's why it all matters, right? If we think through the statistics that we talked about before, the financial guidance that you receive, whether it's through your own personal means of going to find it, whether it's through a professional, it shapes what the rest of your life looks like by happenstance, because the financial decisions that you're able to make were based on the research that you've done, the decisions that you've made, and the solutions that are in place. And all of the decisions you make, they have a direct influence, clearly from the statistics above, on your family, your friends, and anyone in your network who you may have conversations with professionally or financially. So I think picking the right professional, understanding how they work, and why that professional is recommending certain solutions, and kind of what their vision or view of the relationship is. It's really important, because in a relationship that looks fantastic, that professional should reduce worry on your end, improve outcomes on your end, and make it really clear as to why you're doing all of the different things that you're doing.
Right. And another way of putting that is referencing Newton's third law for any of our science-focused friends out there, right? And that simply states that for every action, there is an equal and opposite reaction. To bring that down even in further simplified form, there is an opportunity cost to everything that you decide to do with the money that you have.
Yep.
You have instant gratification, you have delayed gratification, and you have everything in between. And, you know, the purpose of this podcast, why Brady and I come to the table time and time again with insights and value and knowledge to share with the general masses, is because we want to be able to help others level up and get to a point to where they have the utmost financial confidence in some form or fashion, which is purely subjective, right? And it's a matter of finding financial success. So I would say the biggest takeaway would be what in your mind from today's episode, Brady?
It's to take a good look at where you're getting advice from, why you're making those decisions, and ultimately what you're looking for from that advice. I think the other takeaway from today is determining, well, what does either a previous, a current, or a potential relationship with a professional look like? And how is that influencing the decisions that I'm making and the plan that's getting built? And then the takeaway is assessing, hey, is this the best relationship for me? How can I put people in the right seats to improve? What are the outcomes, the risk, everything else in the financial world?
No, I love that.
What did I miss there? What else?
Yeah, no, and I would say it's a matter of removing the stigmas, right?
Yep.
If you're 25 and you make six figures, even if you have $50, $60, $70, $80,000 in student loan debt, $120,000 in student loan debt, you are still an attractive prospective client to work with for some advisors. So understand that, recognize that. If you're a business owner and you have $2 million in revenue every year, but you're showing a negative profit every year, you're showing no profit, you're not able to pay yourself, well, that's problematic in itself also, but there is somebody out there that can potentially provide you with guidance and advice that you could need to get it to where you can start to pay yourself a reasonable salary and start to continue to utilize that strong revenues that you have, right?
Yep.
Making sure that you're taking advantage of that profit first. If you're a pre-retiree, you've never worked with an advisor before, but you have uncertainties around what this transition out of your career into, being completely in retirement, every day is the best day of the week for you, no longer having income coming into your household from working capital, then there is a financial advisor out there that would love to work with you. It's just a matter of making sure, again, that who you decide to work with has your best interest in mind and is offering the services that you're seeking for. So I would say, again, just to reiterate, if you're uncertain about where to start or feel as though you need a new genesis or starting point from your existing advisor relationship, I know our team here at Genesis Wealth Planning would love to sit down with you and extend a complimentary consultation just to learn more about you, who you are, where you want things to be personally and professionally and financially over the course of the next 3 to 5 to 7 years.
And that's regardless of where you stand in your journey, right? At this point, I think all too often you and I see what is someone coming, it's about to be summer, and they're ready for a six-pack, but they're not starting their workout plan until May, right, when they're planning on going to the pool in June.
Our diet starts tomorrow.
Yep. Well, Michael, thank you so much for joining us. Once again, if you are uncertain, please feel free to reach out. And if you found this episode helpful, please like, subscribe wherever you listen to podcasts. Also, be sure to share it with your friends, family, and colleagues. That's important. As we just saw, over half of the advice comes from friends, family, colleagues, others. And for more valuable insights, please visit us at www.genesiswealthplanning.com/podcast. Thank you for joining us this week on the Financial Fortitude Podcast. We hope you enjoyed the show and learned something along the way.
If you're looking for financial guidance that is personalized to your specific needs, we're here to help. Visit us at www.genesiswealthplanning.com to book a complimentary consultation.
That's it for today. Make sure you subscribe so you don't miss out on future episodes. And as always, please share with others you feel could benefit from the show. See you next time.
This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Genesis Wealth Planning, LLC, and opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult with your tax, legal, or accounting professional regarding your individual situation. Michael Acosta and Brady Hemmerly are registered representatives and financial advisors of Park Avenue Securities, LLC. Securities, products, and advisory services offered through Park Avenue Securities, member FINRA, SIPC, financial representatives of the Guardian Life Insurance Company of America, Guardian, New York, New York. Park Avenue Securities is a wholly owned subsidiary of Guardian Consolidated Planning Group, Inc., and Genesis Wealth Planning, LLC are not an affiliate or subsidiary of Park Avenue Securities or Guardian. Michael Acosta's California Insurance License Number 0M50974, Brady Hemmerly's California Insurance License Number 4353077, 6992075, Period 1, Expiration 926.